All right, we should be recording now, starting the options class for August 26th. August is over. All right, guys. We're going to talk tonight about pretty standard, but we are going to put on a little bit different type of trade tonight than what we're used to doing. It's going to be a credit spread, so we're very familiar with that, but it's going to be in an instrument that's a little bit different. Um, so we're going to go over the markets. We're going to go through each of our positions that we currently have on right now. We have one in XOP and one in Cisco. So oil and gas ETF and Cisco. A couple different types of positions, and we're going to go over them, talk about what needs to happen to take profits, and if it doesn't go in our direction, what we need to do to manage out of that position. We're going to go through all that, and then we're going to go ahead and we're going to start talking about the volatility index, and we're going to kind of lead into our trade of the night, our new trade going into tonight, and what we're going to put on. Okay, with all that being said, let's take a look at the markets here. Without a doubt, we've been pushing higher. Without a doubt, we've been pushing higher. But there's something I want to record and I want to note, and we're going to talk about something here. This is the SPY. Let's just go ahead and use this. Look at the most recent swings, low to high, and so on and so forth. Lows to their highs, lows to their highs, and all the way up. New lows to highs. Let's start to measure some of these. This one here went from about the 60s up to the 70s, 10 points. This one here went from the 60, let's just say the 64, up to the 74, 75. Let's call that 10 points. This one here went from the 74 up to the 83, 9 points. This one here went from the 73 up to the 86, let's call it. Let's call that 86, I guess. So what are we going to do? We're going to do, what, 13. Is that what it was? 73 to 86, 13 points. This most recent one. We've done this several times, guys. We've done this several times. 85 to 95, 10 points. Where are we at now? 90 to 100, 10 points. The markets tend to be very symmetrical, guys, and we all know that. We all know that they move very symmetrical. You guys remember our last trade 2 weeks ago? We took a trade when the market was trading down here. What did we say? We said, well, this was a 7-point pullback from the high to the low. That's a 7-point pullback. Well, looky here. That's a 7-point pullback. Looky here. That's a 9-point pullback. Looky here. That's a 7-point pullback, and so forth. So the markets do move in very symmetrical patterns, and so on and so forth, and we cannot ignore some of the facts that that's just how the markets trade. They move very, very, very smoothly. That's the reason technical analysis works, and that's the reason we trade technical analysis, is to go ahead and look and see at some of this. The reason I did all of this, and I was kind of getting us up to speed on what I see the market doing right now, is simply because right now we're looking to put on a trade tonight, and we need to think, hey, where do we see the S&P going in the next 2 weeks? Anywhere from 3 days to 3 weeks. Where do we see the S&P going? What do you guys think? What do we see happening in the S&P? And I just want to add a little side note. Yesterday was the least amount of volume the S&P's had on any single day this entire year. So you guys that were in the trading room that went through yesterday with me, and the patience it was just a long day yesterday. Recorded yesterday was the lowest volume ever recorded this year in a single day in the S&P. So it wasn't just you; it was flat out slow, guys. So There you go. So, all right, I have a flat out 100% of you saying you're looking for sideways. I had a couple sideways. I also had sideways, and I also had pullbacks. So I'm guessing we all kind of are on the same page that this thing is, if you were to say, I don't like saying this, but historically it has exhausted itself as of these last couple days. Wouldn't you agree? Now, can this thing keep on going? Does that happen? Sure, that happens, guys. That's how we take losses. That's why we protect ourselves. That's why we do risk management. But statistically, we are at our range here, and we are looking for a little bit of a break in the markets. That's kind of how I feel too. So we all see this. I'm just doing the S&P to start out here, just so we kind of have an overview of the market. We're going to come back to this whenever we look to take our position in a little bit. And not only are we going to talk about the spiders here, but we're going to talk about the volatility index and what we see that doing as well. Because right now, I'm sure most of you know, that volatility index is sitting down in them 11s, down in them lower 11s. So with the volatility index at support and the SPY kind of exhausting itself to the upside, a pullback probably looks pretty good for a lot of us, and especially a bounce in the VIX. Okay? Now we're going to find out how to take advantage of that when we look to place our trade today. Okay? So, with that being said, yeah. With that being said, let's go ahead and look at some of the instruments we already are trading. Actually, let me pull this over. We'll go right to the options program page, and we'll just make sure we're all on the same page and up to speed here. Guys, we are doing a little bit of work to the website, so bear with me just a little bit. This blue box is going to get taken off. It just had to get coded on the server, and then it's going to get taken off here by the programmer. It's only going to be on the main page or the home page. But for right now, it just is there. So give me 2 days, 1 day maybe, to get that off, and we'll be good. But content's all good. So the two positions we currently have on, Cisco and oil and gas sector, or ETF. We have a bull call spread, so we have a debit spread up here, and down here we have a credit spread, but it's two different credit spreads, turning it into an iron condor. So very, very interesting here, guys. We did have to change. You see, we did not get filled at 88, but we got filled at 93 the next day. We did not get filled at 64, but we got filled at 60 the next day. So took us 2 days until Wednesday to get into these positions. So we've been in them now for 4 days. And we're at a 60-cent credit and a 93-cent debit. So let's go ahead and let's go through some of these positions. And I'm not going to make any changes tonight to these positions. We're just going to go ahead and we're going to update ourselves and talk about, if it does this, then we're doing that. If it does that, then we're doing this. Okay? Anybody have any questions just yet? Any questions just yet, guys? We're going to breeze through some of this stuff, but we're going to try to be detailed on this because this could be a learning curve for a lot of you on how to manage positions with options. It's a lot different than day trading the futures. So we're really going to be managing most of our options here, and we're going to start right here. Let's start with the basic one. Here's Cisco. Now, we're in a little uptrend here. We pulled back, testing support here. We're looking for a quick bounce. We're looking for a bounce here. We actually have a lot of things working in our favor here. We had a low here, and then we had a low here. We actually had a higher low on both of our indications. So we had divergence. We had bullish divergence, which helped out. We're in an uptrend, which helps out. And we now have the volatility rolling up, which helps out because we're in a debit spread. The higher the implied volatility, the more expensive the option will get, the more we're going to be able to sell it for. All good for us. So now you kind of understand why I can't really do much to this position, because everything is working out in our favor. The only thing that bit us in the butt is this one red candle that you see. Without that one red candle, we are really, really doing well in this position. So, not going to get worked up about it. We're just going to wait. I'm going to let this thing work out. Now, what do we do if it doesn't work out? The $1,000,000 question, right? If we start to pop up here and we can break through this resistance here at these 25, say 25 quarter to 25.40, we're going to let this thing go and we're going to take a profit because we're going to be in the profit at that point. I'm going to take profit anywhere from 50 to 75%. Depends on how fast it goes and you know when that happens. We would like to have, it is a debit spread, so we would like for this thing to have a quick pop. We want this to happen in the next week. I would love to see it pop above these 25.25s in the next 3 days. But if that doesn't happen, which it may not, within the next week, I would like to see us have a little pop up there. We'll probably be able to start looking at taking some profits, maybe around that 50% to 75% profits at that point. And then if it doesn't work out, I'm going to make the call. It all depends on where exactly this thing is. Because we have on this position, we have actually bought the 23s and we sold the 24s, right? Yes, that is right. If this thing gets a quick drop, I'm talking about if we get a quick drop here and it drops down below the 24s on high volume. Now, the reason I'm bringing this up is because if we get a pullback in the market like we think we could and it causes Cisco to pull back as well, you can still have an instrument push higher if the market pulls back. But if the market pulls back and it brings Cisco down with it, there is a chance I will manage out of this position, meaning I may find an opportunity to sell my 23s and leave that 24 on if the market is willing to sell off enough. In that case, I will have a short 24 call. You understand what that means? Now, this is only if we get high volume drop. So, if somehow this thing drops below the 24, and it not only just drops below 24, but drops below 24 on high volume, I will sell my 23s, take a loss there, keep my 24s, because I've already sold 24s to protect myself. Yes, it is. It's naked short. I will keep my 24, and like I said, I'm not just going to do this if it goes below 24. I'm doing this if it has increased volume as it sells off. There's a difference. So if we have increased volume as it sells off, I am likely to sell the 23 for a small loss, just a small loss, and I will keep my, I'm very aware, Richard, I will keep my 24s and let them go ahead and expire. And if it dances around and it decides to dance around, as long as I'm still bearish, we'll be able to manage this into the future, whether that be us becoming, if we become bearish on the instrument, then we can roll it and look to trade this gap. Meaning if we get too close to expiration, say in 2 weeks we're still working on this, we can roll it. As long as we're still short the instrument, we can roll it to get some more time. But I just wanted to give you guys a heads up. So if I send you an alert, you guys kind of understand what I'm doing. Now, if that scares some of you, you might just want to take a loss and be out of it. But what I'm doing is I'm managing through this position. I'm simply going to manage. It is a lot more, John. I'm not sure unless I typed it in and actually processed it, but it is definitely going to be more than a John asked is if it's more for more capital requirement for a straight naked call, and yes, it is. So But anyways, we thank you, Richard. Okay, that's how I will though, Richard. And then after that, this is the only that is the only that's only if we get high volume sell off. That's only if we get a high volume sell off. That means that if the volume comes in and it sells off below 24, I want to be short this instrument. Until then, I will continue to keep what I have and look for my profits to the upside. That's it, guys. That's it. The likelihood of that is very, very small, to be honest with you. Yes, yes. The likelihood of us doing that right there, bud, is very small. I just want you to be very aware whenever I send out an alert if something happens. Because we are talking about the markets being potentially a little bit toppy. I don't think we're going to have to do this. I'm just giving you a heads up in case something were to happen. Okay? The only time I would ever do that is if we get a high volume sell off, meaning that we start to get some volume into these markets. Since we've had such low volume, any volume comes into these markets, you could see a nice little sell off, a little gully washer, a nice quick drop. It's a nice way for us to go ahead and manage through that if that were to happen. Okay? So that was that, and that's what we're looking at. You are welcome. All right, any other questions, guys? Other than that, we're just simply waiting for that pump to the upside, and we'll get to take some profits. We'll wait for that push to the upside. We'll look to take that 50 to 75% profit. Pretty simple. So we're still in a good trade, though, guys. There's nothing wrong with what we have on here. We're still in a very good position. So I'm not looking to change anything. This is just precautionary. Everything I'm talking about right now is 100% precautionary. All right, here is XOP. Here is XOP. And what we have here is an iron condor. We have two credit spreads. We are short the 79.81, and we are long, short the 72.70. So we are short the 79.81 call spread, and we are short the 72.70 put spread. We want the market to stay in this area until expiration. So we're coming up into resistance as we speak. Coming right up into some resistance as we speak. If the market uses that resistance and starts to roll over, we're in good shape. If it pokes its head up here, I'm still not going to panic until we break through resistance up here above the 80s. We break above the 80s and I'm going to start managing. But as long as we are staying XOP, yeah. Did I write something else, John? Anyways, as long as we stay inside this range, I'm not going to change anything. We just want time to pass by and we want time decay to kick in. Okay? Want time decay to kick in. If it starts to push higher and we get up above this 80, you're going to see me swallow my pride. I'm going to get out of my 79.81. Get out of my 79.81. I'm going to leave on my 72.70 and collect 100%, most likely, because we're going to stay above these 71s before expiration if it gets above 80. And if I need to, I'll start to sell some protective calls above resistance. But the only reason I'm telling you this, not because I think it's going to have to happen, I'm just giving everybody a heads up in case you get an option alert from me. So if you get an option alert and I say, hey guys, this happened, it went up on increasing volume, It broke this price level on increasing volume and looking like it's going to continue higher. We need to get out of this for a small loss, keeping this other leg on for a full profit. And I'm going to either not put on a protective naked call or I will. It all depends on the market and how it's trading. But the reason for me giving you all these updates is so whenever you guys get the alerts, you're very aware of what's going on. And I'm going to be as thorough as possible. If it's at all advanced stuff, I'm just going to make a video on it. That way you can see it done live here. But if anything doesn't work out, we will keep it on the options program page, and I will send you alerts saying, hey, we're doing this on this position, and this is how we're going to manage this to profitability. We're going to look to continue to go down this profitable path. We're on a pretty good run here. So we're going to look to continue to manage these. We haven't had to really dive into management too much yet. We've really done well at picking some really great trades so far. So, luck have it. We haven't really had to do any of this yet. But to be honest with you, I'm kind of excited and ready to go ahead and start managing some of these positions. So it's not a bad thing in my book. I'm actually ready to start managing some of these positions. So you're welcome, bud. Yep, this is all just a heads up, just in case. This is all just a heads up, just in case. So, any questions, guys? Any questions at all? We've now went over Cisco. We've went over oil and gas ETF. Any questions on them? Oh, no. There are many ways of managing these. That is just my preferred. No. Yeah, that's the thing. I know you're kind of new to options, but no, there is a billion different ways to manage these, and some people will manage one way and some will manage another way. Some have more risk, some are a little more conservative. It's all in what you're comfortable doing. I'm going to do my best to explain when and why I'm doing each thing that I'm doing. That way, maybe, hey, yeah, that makes sense, or I don't like doing that. I'd rather do it this way. And I'll try to give scenarios because it's not like day trade, it's not like doing that. There are a little bit different, and it depends on your risk tolerance, what you want to do. Okay, anybody have any questions about this? Because if not, we're going to roll into talking about the markets, the volatility, and our trade of the night. I don't have to manage out of trades very often, no, bud. The only time I manage out of a trade is if I think I can scratch out a profit and I can do it with a very high percentage opportunity. Most of the time, I will swallow my pride and take a small loss. Most of the time, I will swallow my pride and I will take a loss. But I'm just giving you scenarios, if we choose not to take a loss, how we can manage out of these to sustain some profits. Yeah, not always. I'm not always going to manage out of position. Sometimes I'm somebody that just wants to get the heck out. And once I do that, then I will I use that money to put towards my very next position. I'm not one to be a big fan of tying up money for a long period of time. I'll take a small loss in order to move that money right to my next profitable position. So, yep, there's more than one way to do everything, and some people will like some ways. Some people will be more aggressive, some more conservative. So, we'll give you options. We'll try to give as many options as possible. But thank you for your comments. That makes sense, and hopefully that clarified everything. All right, we good to go? Good to move forward? Okay, one thumbs up. Capiche? Good. All right. Thank you, everybody, for commenting. It helps. I promise it helps. All right. Let's move forward here. We've already pulled up the SPY, but let's pull that dude up again. Thumbs up says, I love it. All right, so we talked about the SPY already. We went into thorough detail of what we see from the technical side here on the SPY. So we know what we're looking for here, guys. We know what the markets are doing. We know that it has moved up 10 points already here on the SPY, which is about its threshold when it comes to pushes to the upside. That 10 points that we just pushed up is about this market's threshold. So, with that being said, let's go over and let's look at the VIX. Where in the world is the volatility index trading? So, we have the SPY trading to where we think it's extended to its max. So we see the SPY potentially sideways to a pullback over the next week or two, right? Do we agree? If we don't agree, just go ahead and answer. And you know what? We're all going to have different opinions. So this is just my interpretation of the markets. And then I go over to the VIX. And is it very possible that the VIX is bottoming too and could get a pop to the upside? Let's take a look here. Well, what generally happens when we come down into these ranges? Pop, pop. Is this at all possible that we could get a little pop up here, guys? Could we be timing this pretty well? Could we be having the VIX getting ready to pop as the spiders are wanting to go sideways or roll over? What do we think? What are we thinking here, guys? What are we thinking? Is this at all possible? I don't even care. Do you even think it's possible that maybe the VIX will go down for another month straight, or will at least go sideways? Can you guys give me that feedback? Open group. Yep. What do you guys think? Are we at least going to trade sideways on the volatility index? Think that's possible? Tom's already got a UVXY trade on. Up and to the right. I agree. I like that. All right, guys. So, with all this being said, meaning that we have this, without a doubt, we have a nice little sell-off here. We're down here in the 11s now. We're underneath the 12 that we like to talk about here on the volatility index. So we're in the 11s, which gets these nice quick pops. You see these quick pops that we see all the time? That's all we need. We're going to go ahead and we're going to start to look at the volatility index and how to trade it. So, are we going to buy? I'm not going to go ahead and go out and trade the VIX. I'm not going to trade the VIX. I'm going to go out and look at a different instrument. Now, we know the spiders are simply maybe going to pull back, but here is an ETN. This is an ETN. It's an exchange traded note that tracks the volatility futures. So it is trying to interpret the volatility futures over the next couple expirations. Now, some of you are looking at this saying, wow, that's a downtrend. We don't want to buy that. Okay, I told you tonight's going to be different. VXX. Yes, VXX. I told you tonight's going to be different. We're going to try all types of situations in here. The VXX is a great instrument to use if you're kind of a contrarian on the market. If you're kind of a contrarian, which a lot of us will be at times, it's a great instrument to go ahead and grab some quick pops. If you think the SPY is topped out, if you think that the VIX is going to get a little pop, this could be a very nice, healthy instrument to get a pop and get a nice 75% profit in the matter of 2 or 3 days if you catch the pop right. Okay? Yes, it's an ETN. It tracks the VIX futures. You can trade this in your IRA. Yes, you can. Yes. It can be traded in most IRAs that I know of. Okay? Nope, no dividends or none of that. Any other questions here about it? If you guys aren't familiar with it, it won't exactly get a one-to-one pop with the VIX, but we don't need that. We just need a pop because we're going to trade the options. We're going to be leveraged already. Okay. Do we have any questions here, guys? Any questions about this particular instrument that I can any questions that I may be able to answer for you? Yes, follows a VIX futures contract. No, you can't shorten an IRA. No. The reason I like this one is because it has weeklies and it has very fairly tight bid-ask spread. So there's a lot of volume here. There's a lot of volume. So what I'm going to look to do, guys, is if we got the SPY looking to roll over and we got the VIX looking to get a pop, this is all within our next trade, so 2 weeks. What do you guys think about doing a VXX bull put spread? What do we think, guys? Some of you are going to say, man, I don't like buying when we're under lows, but looky down here. At support, market's rolling up, Stokes rolling up. We have the implied volatilities popped up here to about, what, 760, 70 something? What are we thinking, guys? Do we like it? This is different. Because usually we're massively going with trends, guys. But we need to look outside the box. We're going to try different things in here. What do you guys think? You guys like this a lot. Wow. Awesome. Okay. Cool. I like bull put spreads as well. I really do. They're a lot of fun. They're good. All right. So I think we got an overwhelming group here. We got a bunch of yeses. So D'Angelina says funny. All right. All right, guys. It looks like that's what we want to do. All right. With that being said, what's our support? Well, I think right here around these 27.50s, maybe even 27. That's a good support, right? What do you guys think? Is that a good support? When we go fishing for some option pricings, is that a good support? Rock bottom, I hope it is, because that's what we're banking this on. Now let's go over here and let's go to the members area. Let's go back to that members area and let's go to option strategies. Now, these are not set in stone, guys. We can deviate, but this is a nice rule of thumb. A nice rule of thumb. We've been working on these plans, these strategies. Here we are under bull put spread. What is a bull put spread? Underneath here, sample plan. We're going to have sideways, uptrending markets or even sideways. I'm going to call this a sideways market. We're hitting support. We're trading sideways. Volume is above 500,000. This thing trumps that by a bunch. Okay. And we're looking for a delta between 25 and 40. Basically, I think John actually asked me to do this, change this to a percentage. We're looking anywhere in that 60 to 75% range, guys. 60 to 75%. That's what this delta basically is saying. As long as we have about a 60% probability to 75% probability, we're good. We're looking for 1 to 3 strikes. See, we got a really, really rich implied volatility. So if we do a $1 wide strike, we're probably going to be able to collect a little bit more than what we have been in the past. I would say we should be able to collect 40 cents or more, actually probably more than 40 cents. So it shouldn't be too far from about a 50 cent, 45, 50 cent, but we'll see. Pushing up 20 to 45 days away. We know all that, guys. And down here, your management and your exit rules. Very important. Keep all this stuff. We'll talk about all that, when time comes. But keep all that, fresh in your mind. And let's go over and let's start looking at some of these prices, guys. Let's doing the VXX. We're not doing the spiders, so I did a spiders look earlier. All right, here we go. All right, VXX. S&P VIX short term. Here we go. Any questions before we look at any of this stuff, guys? We're looking at the 70 or the 27 to 2750. 27s being our support. So we need our position to be below there. So we need our break even to be below 27. Right? We need our break even to be below 27. So what do? Let's go over here and let's look. Probability of out of the money. Looky here, 27. If we collect some money, we're probably going to be right around that 60%. Because if I sell the 27, I'll buy the 26s. Ooh, looky there, guys. Looky there. This is different. We're not used to this much because we've been trading some other instruments. We haven't been able to get this much. We haven't had enough implied volatility. Looky here. We are going to take in 50 cents here. So that makes my break even virtually, 26.5. My percentages just now went over 60. So what do I have? I got my delta and I got my percentages up. I just now collected 48. So basically 26.50 is my break even. Does that meet our parameters? I'd say it does. You want to go to the 25s. There you go. He wanted to check out the 27, 25s. There you go. You get 82 cents. Don't quite get as much percentage-wise. You're risking about $1.20 to make 80. I actually like the 26s maybe. We're collecting so much, them 26s aren't bad. It's up to you. What are you guys thinking? You want to do the 26s or the 25s? We can do the 27, 26s and collect 48 cents. So basically, we have a 50. We're going to take in 50 cents. We're going to risk 50 cents. But here's the kicker. We're going to have over 60% odds in our favor. That is the power of implied volatility. What do you guys think? What are you guys thinking? Would you guys rather risk a little more and make a little more, or be a little bit more conservative in case something doesn't go in our direction? Remember, we are counter trend here. We are counter trend. Let's see. All right, good point. He wants to check out the Theo. All right, so let's go off the 27s. Let's see here. Theoretical price, $1.08. Let's just go off the 27s here. $1.08. Let's say this thing goes up to we're at 20. Let's say we're at 28 now. It's very, very likely that we could go up to what, 32? No problem. Like within 2 days or 1 day, right? Let's look and see if we went up $2 or $3. Actually, that's $4. Let's say $3 here. What's this make this, the cost of this? Went from $1.08 down to 30 cents. Holy moly. Tremendous, right? So we sold 27, so $1.08. We bought the 59, right? So 48 cents. So now we would be buying back at 30 cents, selling at 12 cents. So that is 18 cents, right? So we collected 48 cents. and we're going to look to buy it back for 12 cents. And that's just if it goes up $3 in, let's make sure this doesn't change. There's 25 minus 9. What is that? That's 16. So here you go. Here's the actual number. In 1 week, if it goes up $3, which it definitely can do, if it rolls up, we're already going to have our profit. Think we can get it to go up $3, guys, in a week? Let's go back and look. 27. Right here's 31. Can it go to 31 in a week? Last time it went there in 1 day. Time before that, it did the exact same move in 2 days. Time for that, 1 day. 1 day. 2 days. What are you guys thinking? I'm not getting much feedback here, guys. Am I talking over some people's heads? How are you getting 60% probability in your favor? Okay, good question. John, good question. Because we are selling 27s. We're buying the 26s for 48 cents. Let's just make that a round number, 50 cents. Right? So, with that being said, what's my break even? What's my break even? $26.50. You can go right here to the $26.50. 62%, 61%. No problem, bud. If you get anything that's not nice in round numbers, sometimes you got to ballpark that, John. But this one was really easy for us to do the math because it does have a $26.50 strike price. So there's how I come up with my 60. And it also meets our delta parameters. Implied volatility is near 50%. Any questions here, guys? Do you guys like the position? Sell the 27s. We're going to buy the 26s. And we're going to collect 47 cents, guys. I'm going to collect... What should we do here? Should we go 48? I'm not going to get greedy. I'm going to go for 47 cents. Let me go ahead and edit my page. Let's get all this marked up for us. You like this? All right, good. I like that. Good, because we're trying something different, man. We're trying something different always. I want to get you guys a big old arsenal. A whole bunch of options that you can, you guys can use at any time. So not just something, one deal. I want you guys to maybe find something you're really comfortable with and you think's really great, and stick with that. So, all right. So with that being said, let's go ahead and write this sucker down. What are we doing here? VXX. We are bull put spread. We're going to sell the 27 puts. We're going to buy the 26 puts. Is anybody wanting to do the 27, 25? Is anybody trying to do that? To collect more? Or are you guys okay collecting the 47 cents and moving forward? John, are you going to do the $1 wide? All right. Counter trend, he says no. All right. He's doing the $1 wide. He's not going to get more out of it. He's the one I thought might look for a little bit more. But John's going to stick with that. He's going to stick with the $1. And he said because we are counter trend. Okay. I like it. I like that explanation. And our expiration is September with 24 days. Okay. You want to see a chart? Okay, I'll show you here. Oh, I'm sorry, guys. So let me put this on there. If he wants to see the chart again, we'll go and look at the chart. Guys, it will have the video posted down here. I will have that video posted down here. And I will update all this stuff. But he wants to look at the chart. All right, here's the chart, guy. You want to pull it up on the other one? Here's the VIX. We're definitely down here near the lows on the VIX. Every time we've ever been down this low, it really likes to get them 1 day pops, 2 day pops. You see these lows, guys? You see these 1 and 2 day pops? These right here will get us our full profit that we want. These 2 or 3 day pops is all we need to get this thing to that 50-75% profitability that we're looking for. We don't need this thing to move and move and move and move. We just need a 1 or 2 day pop. That's all we need. Okay? Even one of these little guys, that's probably enough to go ahead and get us what we need. Okay? So I'm just giving you guys kind of a heads up what you can look for in the VIX. And then more importantly, this is the actual instrument we're trading. You can see it a little bit better on this chart. But looky here, we just ran the numbers and we can collect 75% in 1 week if this thing goes to, what was the number? 31. Right here is 31. If it goes to 31 in a week, we make 75% on this position. And we have the ability to. I'm not assuming anything. I just ran the numbers through theoretical price, and that's the assumption we came up with. Granted, if everything stays. Granted, volatility can change and all kinds of things can happen, but it's a nice basis to go off of. And it's not something I use all the time, bud. No, because I can do this stuff kind of in my head, but I want to kind of instill some of these qualities in everybody that they do go back and do kind of run the test and get it in their mind that said, hey, all right, well, if it goes up here, I can make about 50% and so on and so forth. So I do like the trade. Now, what happens if this thing gets filled and it sells off? What to do then? Well, we're going to have to talk about that. We're either going to go ahead and we're going to go ahead and cancel the order for a small loss, or here's where we could get to that next level. If it doesn't sell off and it just dances around here and it does real slowness, we can look to learn to roll something to the next month. We can look to roll something to the next month. I don't want to get ahead of ourselves because I don't think we're going to have to do that. But let's just say that this VIX doesn't get one of these pops. Say this doesn't happen and it keeps trading lower. Well, we can maybe in 15 days or so, we can roll it to the next month. But that's something that I don't see happening. But if it does, we're going to learn how to do that as well. I do see us getting one of these little pops here on the volatility after Labor Day, going into Labor Day. Something's going to happen around this next week, guys. And I should see we should see the volatility pick up. And that's what we're trading. We're trading volatility. So the volatility gets a pickup. Our trade gets a pickup. That's what we're looking for. Make sense, guys? So this is a different type of trade than we're used to. It's a whole different animal. Counter trend. We're just looking for a pop. If the volatility picks up, we're coming into a holiday, coming out of a holiday. September's coming in here. I'm thinking volatility is going to pick up. If volatility picks up, our trade's going to pick up. How's that sound, guys? How does that sound, guys? Are we good? On the same page? Any questions? You guys like this position? This a little bit different. A little bit different, guys. We keep on throwing something new at you, but we are now 7 or 8 weeks. I think this is week number 7, option class number 7, but we keep on throwing something new every single time. So something new every single time. We're really going to reach the end of our threshold here, and we're going to start repeating things, but that's good. I'm getting a lot of feedback that you guys are huge on the credit spreads. You could literally care less about everything else that we do, It's all about credit spreads. And that makes me feel good because if we can instill like even a little bit of that, I think we can really learn to be consistent over a period of time together because credit spreads, no matter what people tell you, that's where it's at. That's where it's at. Collect premium, collect premium, collect premium. Manage portfolios that way. That's the way to do it. And that's the feedback that I'm getting. So I love it. We've been very, very, very lucky and been profitable on all of our positions thus far. But I am seeing a lot of you leaning towards preferring to collect premium. You like the credit spreads more. So we're going to keep on looking to add some new character to the trades, new character. That way we can all get a feel for about everything. But I think in the long run, we'll be taking 80 to 90% credit spreads. D'Angelina says it's not luck, it's skill. You think? All right. All right, guys. Do we have any questions? Do we have any questions, guys? I'm excited about this position too. Don't get married to it, though. Don't ever get married to a position. You can really like something, but if it's not going to work out, you got to learn to push it aside and let it go. So, I like the fact that you like the position, but I hope it's for learning and all that. Because don't get married to a position. You'll have a hard time letting it go. But I think we got a good one on here as well. So, anybody have any questions? Any questions at all, guys? I want to thank you guys again. Another great options class, some good questions, and more important, some good comments on some of the positions. I'm not doing anything to our current positions. I just wanted to give you guys a heads up. And for some of you that are looking to manage them a little differently, that's fine. I will let you know how I am going to manage them, but I'll definitely update you guys and send out all them alerts and make sure we're on the same page there. But does anybody have any questions about what we have, the new position here? We're trading volatility, guys. This is the first time we've done it in an options class. We are actually trading the volatility. So here we go. This is that next step. So are there any questions? Any questions at all, guys? Yep. See you in the morning, man. All right, guys. Some of you I will see in a week. Some of you I will see first thing in the morning. But no matter when I see you, you guys have a good night and a good holiday if I don't see you. And that's it. So you guys have a good night. Thanks for coming.